Hi everyone. So in this video, I'll try to answer the question which a lot of people, especially the retail investors, have in their mind. That is, what is causing this panic? Is it a start of a bear market? Why exactly are stocks cracking 5, 8, 10% in a day? And this week was extremely bad for the broader market. The mid cap index crashed almost 5.5% in this week, and the small cap index close to 7% right? So we'll first understand what is happening, because if you look at the Nifty, hardly down to 2.5%, right? And if you look at the mid and the small caps, they are down like double and triple of what the Nifty has done. So what has happened is, because even I had told in like the Monday's video that the accumulation was pretty good, and on Tuesday we saw the bounce. But Tuesday evening we got the news that there is the government has the GDP estimates for this particular year. The government has revised it lower by 20 basis points to 6.4% instead of 6.6 what the RBI had estimated, right? So that is actually causing a little bit of panic, because if you look at the last 4 years, a lot of froth was built up in all these capex related names, right? If you look at most of the infrastructure guys and other stocks, right, wherein which were the capex themes, all these PSU stocks, PSU banks, right? And they had a huge leverage exposure from retail, or even let's say the big players in the market, right? Not like the mutual funds and all, they don't play the leverage game. But let's say a common man with, let's say, a portfolio of 1 CR, 2 CR, even those guys were using leverage, probably double that up to buy 4 crores worth of stocks instead of just 2 CR that they had. So this has caused some kinds of a bubble in the market, especially in the broader market, because that is where most of the retailers play. And now that bubble is kind of cracking down, because they know that in the coming months, if you look at the PSU stocks, PSU banks, all of them are cracking big time, right? Even most of the stocks wherein huge stories were built up saying that it is going to go so much and things like that. The P valuation was extremely high. It was unsustainable, and this kind of cycle keeps repeating. It happened in 2018 as well. It is happening again now, right? And when this bubble starts to burst, it causes a snowball effect. That is, once they start, let's say a guy had a crore portfolio and he had leveraged his position and bought almost 2 CR worth of stocks. Now, once that starts cracking 10%, 20%, what happens is, on his 1 CR, he would have lost just 10 lakhs or 20 lakhs. But because he has leveraged it, he's now losing 20 to 40 lakhs, right? Which is a twice as what he would have lost. And now that is kind of causing this ripple effect, making people or these guys kind of book out at whatever price they are getting it, right? So that is the reason you are seeing on very low volumes the stocks keep going down and down. Although I keep commenting that the accumulation was good on Monday, right? So what these mutual funds or the PMS guys do is, they do not buy whatever stock they want. Okay, they buy very certain stocks which are fundamentally very strong, and the valuation is also decent. All right. So in these bubble kind of stocks, what has happened is, the mutual funds, those guys are not coming in and buying it at a lower level. So whoever is trapped is kind of selling it at whatever price he is getting, right? And that is causing this drawdown. And people who have now looking at that those particular stocks, they are just panicking and exiting everything, and that is causing even other decent stocks also to correct, right? Today's data also seems to be better than the last few days, but then, like I told, these mutual fund PMS guys, they kind of buy only fundamentally decent stocks, right? And today most of my trading positions, I kind of hit stop loss. I have exited most of them. Maximum loss that I would take in any position would be 6 to 7%, not more than that. So my trading portfolio is anyways, I'm out of the market as of now. So let's look at how the Nifty momentum and the mid cap momentum are looking like as of now. So Nifty, like I told you, down 2.5%. the large cap, here actually the momentum has improved, unlike what we saw, right? Because if you look at Nifty, it was hardly 0.4% down, but the momentum here shows an uptick, which is a good sign. If you look at the mid cap, down 5.77, close to 6% this week, and it has broken this range that it was trading in, and it is anyways below the 30 WMA line. This can be a start of a bear market in case the Q3 results, which would be good for a few sectors. If the other sectors do not show improvement, probably we might see this going down even further. Or if the Q3 results are decent, we might see a bounce, and then we would decide whether that bounce gets sold into, or you can rally from there as well. But as of now, looks very weak, the mid cap 100. And if you look at the momentum, continues downfall in the momentum. It has reached a level from where previously it has seen a bounce, right? We have now entered that oversold territory from where generally you see a bounce. Now whether that bounce is going to be backed by good accumulation and very strong momentum, or it is going to be a dead cat bounce where you bounce for 2-3 days in a row and then again start cracking from there, only time will tell, the data will guide us. And if you look at the small caps, here again 7.3% crack, again below that range that it was trading in continuously, and also it is below the 30 WMA line. Even the momentum there has cooled off to the lows from where usually there has been some kind of a improvement in the momentum or a bounce that comes in. So net what is happening is no one knows where this panic is going to end, because let's say someone is brave today, tomorrow seeing his portfolio again deteriorate by 3-4% would throw in the towel, right? So we don't know where this is going to stop until the data, the charts give us a reversal candle, reversal in momentum. It makes sense to be light on your positions or away from the market. Once we know we are bouncing back, it makes sense to again get in and trade. But these kind of opportunities where there is a lot of panic, if you have any great quality stock that you know is available at a reasonable valuation, if you extrapolate it for let's say next few months, next few quarters, or next few years, then those kind of stocks which are investments could be added for let's say the long term or the medium term of next 2 years plus, right? But trading as of now is difficult because the whole market is kind of sinking. This probably helps you know why the market is kind of cooling off, and it makes sense to wait instead of just jumping in right now. Hope this helps. Thank you.